Rajat Sharma also joins us from Securities. Rajat, hi. Good to be speaking with you. Let's start by discussing the private banking space itself. How bullish you would be on that space to begin with the year 2024? Is that one of the top sector recommendations that you would have?
Yeah, good afternoon. Nice to be here on your show. No, actually, it won't be. I think private banking is something which I'm a little wary of, primarily because it's run up a lot, and most of the private banks are trading at uh, very high price earning multiples. I do have some small private banks in my portfolio, one being IDFC First Bank, the other being Federal Bank, and I think these are the banks which have the potential to eat into the market share of larger banks, but be that as it may, I think today also the action you're seeing on HDFC and ICICI is not really because of the strength of those stocks alone, but on a day when Sensex moves up 600-700 points, they have a lot of weightage on the Sensex and the Nifty. So when money comes into an index, when there is buying across a market, because even today if you see Nifty is up about 1.2%, but small cap is up only about 0.3%. So it's essentially a lot of basket buying in large caps and in the frontline indices, because of which these banks are moving up. I'm actually a little wary of them. I think they should cool off, correct at some point in future. These are great banks. I mean, these are great businesses. I'm not in any way saying there's any problem with HDFC or ICICI. I just find them overvalued right now.
Rajat, I remember just I think a fortnight back, Federal Bank did put out a kind of a communication to the shareholders, putting out their aim of how they'll be expanding their ROA and ROEs going forward, and they want to position themselves as a pan-India bank, not just southern-based bank and all of that. If they indeed, given the quality of management, one would give them a good assumption that they would be moving in the direction of achieving those numbers. How can the valuation actually change? What is the possibility of re-rating do you see in Federal Bank, say in a 12 to 14 month kind of a period?
I think 12 to 14 months would be too short a time frame. I was reading the commentary that they gave out. And I think the focus is clearly on increasing fee-based income and reaching pan-India, not just to build a bigger deposit base, but also to offer more services, because it's the services aspect which they're weak on. And it's going to take a while, but I'm fairly positive with the kind of asset base they have, the strength of their balance sheet. If they actually make a foray into some of, because they're very well capitalized and they can make that expansion. But I think 12 to 14 months would be, not a very long time horizon to look at. Maybe in the next 2 to 3 years. But look, I've had this stock for almost 8-9 years now, and initially did not do anything. But in the last 3 years post COVID, it has moved from about 45, 46 to about 153 today. And I'm fairly positive that these banks, the smaller banks, IDFC and Federal Bank, would outperform the likes of HDFC and ICICI going forward.
Coming back to the point, okay, you're a bit wary when it comes to the large private banking names, but what are the recent additions that you have made to the portfolio? Which sector, which stocks, which still look attractive, because a lot of those mid caps, small caps have actually run up?
Yeah, okay. I'll talk about the additions that we've made. It's primarily in pharma space and in real estate. But before I do, coming back to banking, one of the stocks that we've added to the portfolio is actually Paytm, and I tweeted about it saying that this stock can do well because they are almost like shadow banking, quasi banking, and nobody liked that comment. And I will give a disclosure. When this stock got listed, when Paytm got listed at 2100 on your own channel, I said this is the worst stock to buy at this price of 2100. But market cap of 38-40,000 crores, 630 rupees where it's trading. I'm actually quite positive on the stock, especially after the way it fell last week, after they said we're not going to disperse these small ticket loans. And I think too much is being made out of that. Small ticket loans, 50,000 rupees. I wonder who's taking 50,000 rupees of loan. And I think they let go of these people, the 10% staff, is because those people were servicing these small ticket loans. Look, 3-4 years back, Paytm did not have a clear revenue model. Today, if you look at them, they charge 7 to 9 bips from all the merchants for all the payments that they get for them. They're into dispersal of loans on which they charge a good rate of interest. And they're going to target loans 5 lakh, 3 lakh, 4 lakh plus. And I think I'm fairly positive, given the way they, given the reach that they have their sound boxes and these scan codes everywhere. They can reach out to these small merchants and give them loans. And as I said, nobody is looking for a 50,000 rupee loan. People are looking for loans in excess of 3 to 5 lakhs, even the smallest merchant. So that's one stock we've added. The other stock we've added recently is Laurus Labs. And again, Laurus is a stock where, they've done 300% higher revenue in the last 6 years. The revenue has gone up by 300%. And from being a pure, API company which was into retroviral drugs, now they've sort of diversified their basket. They still get more revenue from APIs than they did 6 years back, but that is now about 35% of the revenue, which was about 65% of the revenue. Now they've got into a lot of new spaces, one being biotechnology, which is a huge margin space, which is right now only 2% of the revenue. But I think this basket is going to expand for them. It's available at a very, very good price. I think that's one stock that investors who have 5-7 years should buy. It should give them very, very handsome returns. And the other stock that I've added is Gulf Oil. It's the second largest company in this category. Castrol being the first. Castrol is trading at a price earnings of about 19. Gulf Oil is at 12, and Gulf Oil is expanding faster. They're using and leveraging their dealer network to reach out. They've recently launched EV fluids, which is a little futuristic, but yeah, I mean, they are getting into that segment. They have a first mover advantage. So that's one stock we've added. And keep in mind this stock, even at this price, it's the run up about 100 rupees since we bought, but even at this price, it's got a dividend yield of about 3.5%. So and beautiful accounts, very clean structure, held 72% by Gulf Oil International. So I like companies with zero debt, good dividend yield, growing markets, and clean ownership structures. So these are the three stocks we've recently added.
That's interesting. Paytm, Laurus Labs, Gulf Oil.